All right, welcome to this conversation. Thanks so much for joining us. This is an interesting time to have this conversation. Remember, the budget announcement came out today, and there are a lot of questions that people have. Some interesting, changes that were made to the personal tax returns always brings up a certain number of questions, and we'll go through that. But first, let me bring you our guests for this evening. These three gentlemen now have been analyzing or breaking down the budget for us with me for over a decade. Let me bring in Mr. Dhirendra Kumar, the founder CEO of Value Research, Mr. Shailesh Haribhakti, who is without doubt and by a very large margin India's biggest tax expert, and Anuj Puri, who is the final voice when it comes to real estate in India. Gentlemen, thank you so much for making time for me year after year. It's always a pleasure to have this conversation with you. Just to start off, just taking our audience through the big announcement, and the big announcement that I doubt I'm sure we're going to be talking about most of all, is the direct taxes announcement. So remember, for our audience, we have the old regime and the new regime, because it was not complicated enough as it is. In the old regime, you have availability of all the tax exemptions through your investments. In the new regime, there are fewer exemptions, and the government is attempting to simplify and what looks like nudge people towards the new regime. So, as of now, if you opt for the new regime, you will, if you make less than 7 lakh rupees a year, you will pay no tax. If you make more than 7 lakhs rupees a year, there is a new tax slab format that's been announced, and that's available right now easily wherever you want to look at it. The government has also cut tax on the super rich who are in the new regime who make more than 5 crore rupees a year. So that's our first question. That's what we're going to look at, because most of the questions our audience have sent us comes from this new regime versus old regime. So taking that first, Mr. Shailesh Haribhakti. Mr. Haribhakti, do you see the new regime as better? And do you advise people to switch to this new regime now?
Absolutely. I think, Faye, the new regime is making tax assessments extremely simple. The form is going to be rationalized, and the speed with which the faceless assessment will be done will leave all of us out of breath. I think today the finance minister said that about 45% of the returns are processed within a, a period of 15 days from filing. I think that number will go up significantly, and the ease with which people will be done with their taxes will be such a huge relief. I think there will be a massive transition. Today, about 61% of the taxpayers are under the new regime. I believe that that will go up to about 85 to 90%. And so we will see a very, very massive changeover. And I think the reliefs, the drop in slabs, the expansion of the slabs, the drop in rate, and the removal of the very, very usurious surcharge, or at least moderation of that to 25%, are all very welcome tax provisions in the new budget.
Mr. Haribhakti, I'm smiling because I certainly don't fall into that category of people who pay the surcharge of 37%, who make more than 5 crore rupees a year. Anyone who's watching, congratulations to you if you fall into that category. Kubu10 on Instagram and Parth Shah asked that question of old versus new regime, which one is better? I'm going to take the same question to Virendra Kumar. I'm a little disappointed in the new regime because it actually seems like it will discourage long-term investment.
Yeah, that is the only thing which I dislike about it.
Please go.
Because not that I'm a supporter of the basic. One should not be making investment decision primarily because of tax considerations. But it used to be a great it in early stages of your career, when you have low earnings and virtually no savings, you don't get to start investing. And when you are forced to, it used to be a very desirable provocation for normal people who will otherwise not invest. And this ELSS in particular is a huge missed opportunity, because this was the most desirable kind of equity exposure. Otherwise, you look at how people invest in equity. They invest in an IPO and mostly they lose money. They invest in an NFO, new fund, and a racy one, they lose money. They look for a fund which has done very well in recent times, chasing past performance, and they lose money. ELSS was the only thing, where somebody was forced to invest in the month of March, because people almost always are delayed. Uh, they invest only when they are faced with a deadline, and then you get stuck for 3 years. And when you get stuck for 3 years, you end up making money. I have rarely come across a person who invested in an ELSS and has been saying that, oh, it turned out to be so disappointing. So I would say that this is one thing which which is going to, which I'll miss. And I think it is the behavioral part of investing is something which should be there in the mind of finance minister, because their decisions actually influence the way you act.
I'm going to come to you about some questions about investing in equity as well, but I just want to bring in one question for Anuj Puri. Anuj, this one comes in from on Instagram from Pari Thorin, who says, home loan interest benefits under the new tax regime. There has been no particular change in any of the benefits for buying real estate, if I'm not mistaken, new or old regime. Is that correct?
That's correct, Faye. It has been an ask of the industry that they have been asking for more rebate to be given on the interest that is paid on the home loans, but that change hasn't occurred. The only change, Faye, that has happened, which is a bit negative for the real estate, is that on the capital gains, there's an upper limit of 10 crores that has been put in. Many investors, certainly in Bombay City, we used to find is would make money in their other businesses or in shares, stocks, or sale of the properties, and then invest in luxury residential properties to take the benefit of the capital gains. In many cases, about 28% of it they would save, and there was no cap to that. So that cap has been introduced in this budget.
Again, I'm smiling because I would love for my audience to actually have this problem. It's a good problem to have. If you have capital gains of more than 10 crores in a year, it would make me very happy to have to deal with that problem if it were to ever arise in my life. So that's my wish for all the audience members as well. Anuj, buying homes versus renting homes, do you see, because a lot of young people, especially the ones who follow us on Instagram, younger people feel a little more secure with just renting. Why should we buy? Why should we take on this massive burden, plus the maintenance, plus the home loan? The benefits are coming down every year.
So I'm smiling, Faye, because I'm looking at Dhirendra, and we've been doing this show with you for 10, 12 years. Last year was the first time that Dhirendra said is that if you want to buy a home for your own use, please go ahead and buy a home. So I would say, stress on that statement that he had made last year, that if it is for an end user, and say there should be at least one home that the person has. During the pandemic, unfortunately, we saw that many building societies differentiated. If you were a tenant, you were under more stricter rules than if you were the owner of that apartment. So clearly, that brought in nervousness amongst many, many millennials. So the thinking, and currently I've discovered many millennials are wanting to now own at least one residential, which is their end use, rather than go out and rent. If you were to look at it financially, it doesn't make sense. I would never be able to win that argument, whether rental versus buy, because your yields on property, assuming no capital gain, is at best 2.5%. But I do feel is long term, there are capital gains that we have witnessed over the last few decades on residential property. And more importantly, there should be a solid investment, a roof over your head that you can call your own. So it is perhaps less of financial, but more of emotional. But over a period of time, even financially, it plays out well.
Thank you, Arj. We have a question for Mr. Haribhakti from Aman Peshawari. Aman asks, is the new tax regime beneficial for businesses? Mr. Haribhakti, can you
Businesses
tell?
which are,
Go
can
ahead.
you hear me?
Yes, yes, we can hear
Yeah.
you.
So it is beneficial for businesses which have a simple model, which is based on not too many exemptions and reliefs which they seek. And if that is the case, if the only offset you're looking for is business expenditure, then the new regime is still valid. So I think a lot of the micro and small and medium enterprises will shift over to the new regime. And my wish is that at some point we have very little tax filing and assessment as we know it today, and there will be much more of tax determination. So instead of your filing a return and then getting an assessment order, what should happen is that you get a demand notice that this is the tax computed for you, you pay it, and that's the end of the matter. That's where we are headed. This was started about 4 5 years ago by Mr. Hasmukh as an approach to tax determination. And I think all the steps that the government has taken since then have been in the direction of converting India to a very modern digital tax determination framework as opposed to a tax filing and tax assessment framework. So,
While
yes,
we're on the
businesses
topic,
will transfer.
while we're on the topic, Mr. Haribhakti, not directly to do with the budget, our GST system is really clunky, especially for small businesses, for freelancers, people who are raising invoices. It really flies in the face of everything we want to believe about our tax system because it's so unfriendly, it's user unfriendly. Is that something you expect will improve?
Faye, I believe that the GST system has stabilized quite a bit. And what you're saying would have been very valid maybe 2 years ago. But every year we are noting in our practice that the GST situation on a daily basis has improved considerably. And the swift manner in which disputes are resolved and issues are picked up and sorted out has been dramatically improved. And so I think we should give credit to the way digitization has come to the taxpayer tax gatherer relationship.
Okay. I have a question on senior citizen savings schemes for Dhirendra Kumar. This question, let me just see who sent it in, comes in from Sun Great Orient. What does the hike mean for senior citizens? Just to bring our audience up to speed, senior citizen savings scheme, which are fixed deposits with a slightly higher interest rate, one senior citizen was allowed to invest up to 15 lakh rupees. That has now been doubled to 30 lakh rupees, which in my mind is excellent for our seniors. Devendra Kumar, how do you read this change?
No, I greatly appreciate this. And, this is something which the government should work towards because everything was, this scheme was launched something like, 15, 20 years back. And some limit was set or some ceiling was set. And then it remains constant forever. So it should get updated because, these are all 15 lakh 15 years back compared to 15 lakh today is very different. But that apart, I think this is an excellent thing because senior citizen savings scheme is the safest thing possible for any Indian citizen. Then it is the highest yielding fixed income avenue today. It is 8%. So, and this is the generation. These are the set of people who are not used to market linked investment. We did not give, in fact, the government confiscated all their savings all their life. And so they became to make India a fixed income country. And now when they are when they have grown old, they are, they are being told that the way to actually enhance or optimize your return is to go and dabble in equity, and they think that they have to dabble. So I think it is very nice to actually facilitate a mechanism whereby these senior citizens, and then government is benefiting. Senior citizen saving scheme is nothing but you are lending to the government. uh, so they are doing a favor. They are giving little marginally higher return, but it is not some substantially higher return. 8% taxable. So good for retirees, good for them in terms of they don't have to. Earlier there was people were looking for all kind of avenue, you spouse, and
Mm.
you will hit the ceiling, and then uh,
Yeah.
this another scheme launched by LIC with this in mind was Pradhan Mantri Vay Vandana Yojana, where one can invest up to 10 lakh rupees, and the post office MIP, which yields little lower, but one could invest 4.5 lakh rupees then. So this, to my mind, is the basement, is the foundation of any fixed income yield seeking investor in his retirement, because these are absolutely guaranteed thing, and this is the safest thing possible in India. So increasing the ceiling, increasing the limit here is very welcome.
So, the other question I want to ask you, Isaac Prasadam on Instagram says, is the share market safe to invest? With Isaac's permission, Dhirendra Kumar, I'm going to ask you a slightly uncomfortable question. Given the goings on of the last 5 days, specifically with the Adani Group stocks and the shakedown which we've seen in the market, there is a question about corporate governance. There is a question about regulators. There's a question about how safe the investors are. And you said also, as soon as there's some flashy IPO, we've seen a flashy sort of FPO now in the market.
Yeah.
Does this shake the foundation of where we're standing on our equity markets in any way, in your mind?
It does not shake my foundation, but my understanding of things. But yes, it is uncomfortable. If something can happen at this scale. But when I look at things objectively,
Yes.
this is when assuming that it is. I'm just looking at it as a stranger. Here is a promoter who is coming out with an IPO or a follow-on public offer at a huge premium. Investors have a simple choice: don't invest. I think a lot of people are being taken, or they are tempted by the greed, and this is something which I think was true for all the IPOs which has bombed. If you look at all the fancy IPOs where investors have lost 35 to 80% of their money, it is a situation like that. There are many. In fact, it is that is not only the case. Infosys is a great company, and in 2001, uh, the price was about 16,000, and it took nearly 14 years thereafter to recover to attain that same value. So there could be a great company, but if you pay a very fancy price for that, you will never make money. So and investors need to really think of themselves as investor, not a trader or a speculator, or taking a punt on a stock.
So, let me then take the question to Anuj Puri as well. Anuj, we have a question from Iha Sharma, who says, "What should one invest in this year? Real estate, stocks, or gold?" Unfortunately, this one comes up for you every year. Uh, from where we're looking at it right now, in terms of real estate, in terms of housing specifically in our big cities, do you expect the prices to move up further from where they are? If we look at our outer cities, for example, whether it's Bangalore or Delhi or Mumbai, what is your expectation on the prices?
So Faye, NHB came out with its report yesterday, and it was out in the major newspapers today. And we saw there's been an increase in the price over the last 12 months between 5 to 22%. NCR, Delhi, where you and Virendra are, it has been the highest increase, 22%. Uh, I don't think this year we will see that kind of price rise. Last year we saw, because the commodity prices went up, the cost of construction went up because of Ukraine-Russia war. Many of those prices have eased subsequently, whether it is steel, cement, those have eased as a result of it. We're not going to see that increase. My thought is that the price increase is going to be largely in line with the inflation rate. As far as the question is concerned on the investment, again, I'm not sure that buying residential is a great investment at this stage, because, as I said, you will be about the same level of increase in the price as inflation. If you're an end user, it's the right time to buy it. If you are an investor, then you may want to look at it from the REITs perspective. That's a great instrument that came out a few years ago. We've seen the stability of income that we've had on the REITs. You can invest in the stocks of the listed real estate developers, or you can buy income yielding office assets, real hard office assets. So as an investor, I would recommend those three, sort of two of them instruments, the REIT and the listed stocks of realty players, and on the hard asset office, because that income, gives you 8.5% return on the investment that you've made.
Dhirendra Kumar, a question for you. One, Kailash is asking, is the government discouraging investments in PPF and NPS by nudging people towards the new tax regime? This is a question from several people. Even Jeevan Nagraj is saying, why is the government discouraging savings by pushing the new tax regime? Is there a way to opt for the new tax regime and still focus on our savings and investments and not lose out?
You can continue investing in all these things independent of your tax benefit. But I think, for everybody who has configured his life, his financial life around these tax saving investment, uh, you can well carry on with the old system. Because if somebody is investing 1.5 lakh rupees under Section 80C in a ELSS or EPF or whatever, 50,000 rupee in NPS, and if you have borrowed money for buying a home and you are paying interest, if you avail all this, there is a possibility that depending on your scale of income, opting for this old tax regime might be beneficial. But also, because this the new regime is not encouraging, has nothing to do with whether you should invest for future or not. The reason why you should actually invest, and invest well and invest thoughtfully and in a manner, so that simply because you have a future a phase of life where you will not have earnings and only your investments will have to support your income requirement.
Is it possible once we pick the new tax regime to go back to the old one, or is that a one-time switch?
No, I think it is possible to move back and forth on an annual basis, but Mr. Haribhakti will be able to, confirm us, tell us with conformity.
Well, we've lost the connection to Mr. Hari Bhakti. We'll try and get him back, but this is a question that's popped up several times. People saying, if I switch this year, for example, can I come back next year? Is that a challenge? There is a question for NRIs as well. Sherman79 wants to know if there are any changes announced for NRIs or any benefits announced for NRIs. There was another question of, where to invest money that's coming in from overseas right now into India. Dhirendra?
No, one should, I really don't have a specific idea in terms of where to invest, but diversify. If India is the only place where you are still growing, where we still have reasonably priced market, where we still have, there's a possibility that, we have a good segment of the market which is reasonably priced. We have, Faye, what you were asking earlier, there is always a segment of the market which is speculative, which looks unhealthy, which looks crooked, and it is very much a, maybe it is an essential ingredient of the market. The market is made up of all this stuff. In fact, we have about 5,000 listed companies, of which 3,000 companies are not traded, and of which 800 companies have been delisted, by the stock exchange for the non-compliance of their reporting. So this is life as usual. Some of them, when I look at some of the big corporations, they actually, were crooked businesses a long time ago, and they changed their mind. They just, over a period of time, they realized that, being honest is more profitable. then because the market was able to reward them with something else, which turned out to. So and at the same time, when you look at the corporate mortality, we have Infosys, we have Wipro, we have HCL, we have TCS. But many people forget that there used to be a company called DSQ, which was just as big as, or almost half as size as Infosys in the early years. And that promoter actually used to print the certificate of his company, then trade in his own stock. Uh, Likewise, we know the Satyam story. So, I was actually in SEBI's office when that particular fax actually came, and there was a meeting which was going on, and the SEBI chairman came with a grim face, announcing what, basically not announcing it, that meeting was cancelled, of everybody sitting there, and they all huddled into dealing with the emergency. So here was this big corporation which suddenly realized that everything on the balance sheet wasn't there. So I don't think this is new. I don't think this is the last, and we still have to figure out that what exactly will happen to this.
It's it's an interesting place where we're in right now. Anuj, let me ask you this: we've had our fair share of problems in sort of underhanded and shady dealings in the real estate industry as well, whether that's to deal with land or buildings that never get built, homes that never get delivered. Post RERA coming in after a couple of years now, do you see that cleanup actually being successful? Is there, is the real estate industry also perhaps better regulated, more reliable now than it used to be?
Big time, big time, Faye. There's no doubt about it, and that's why, Faye, you're seeing the consolidation in the industry. This has started from 2014. When the demonetization happened, a lot of the developers perished who were dealing in cash. Then you had the RERA come in. Many developers, who used to transfer funds from one project to another project to buy fancy cars, go on holidays, buy next plot of land, discovered that they had to be a lot more disciplined. Many could not get disciplined, as a result of which they have perished. And then, GST came in, and clearly the way the enforcement agencies have worked on non-delivery of product by many developers has caused a huge amount of nervousness within the developer community, who in the past were really dealing with the wild west. So
Yeah.
I do believe is that given the way our laws and the enforcement of that has happened over the last few years, there has been a huge amount of consolidation. There has been a huge amount of maturity, and this has been to the benefit of the consumer, because the real estate in the past had a really bad name. Today also there will be a few bad apples, but there are a few bad students in every class. But largely the class has become a lot more disciplined, because there are only good students who are getting cleared and moving on to the next and getting promotion to the next class. Others are being sort of expelled from the school, and we have seen that within the various stakeholders in the real estate, more so amongst the developers who have exited this business because either the brand wasn't there, or the transparency, or the financial discipline, or focus on delivery was just not there. As a result of which, Faye, to answer your question, there has been a lot more, I would say, cleanliness that has happened. There's been a lot more transparency in dealing. Cash, certainly on the new home sales, has largely disappeared. It still prevails in second homes, where buyer seller do those trades which are very difficult to be able to identify. But clearly on the primary, developers are very nervous and are not really wanting to deal in any cash when they go out and sell these apartments.
Dhirendra, do you agree? You used to have a lot of misgivings about the real estate sector. Are you more comfortable with the sector now?
Maybe, I'll be very happy if everything that Anuj is saying is true. Uh, and I hope it is. But yeah, I'll be very surprised that, it'll all get cleaned up so quickly. Because when you have the largest, because in my vicinity, I think it is way too messy to get cleaned up so early. Uh, the second largest builder in the country is still in the jail. The fourth largest, which emerged was in jail, and there was this whole event going on in Delhi where there was the demolition in progress for such a long period. And I don't know what happens to all those people. The Unitech fellow, the JP guys, they lost their. They have still a large number of project outstanding. I know so many people in my surrounding who have paid the money, or they have substantially paid the money. They are stuck and they don't know, and they are unable to get a redressal despite all the the settlement mechanism or the court getting into the process. Still they are unable to find get a closure to their ordeal.
I'm
Uh,
I'm I'm
yes.
delighted to say that from no, 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 it has become maybe. Uh,
No, no,
and
Anuj, when I see all the horror stories around me where people have spent their lifetime accumulating something to put together, and eventually they didn't get anything.
I agree. I agree, Dhiren. The only
It's
thing
very
is, Dhiren,
unfortunate.
going forward, I'm hoping that you're not going to, hear or see uh, horror stories like these. There will still be horror stories. Every business there is, as I said, there
Yeah.
will still be bad apples. But my thought is the way the developer community has seen what has happened to the people who have not delivered, and the treatment that they have met. I think there is nervousness, there is more sanity. I am hoping that there is more discipline when they're thinking of doing new projects with the intent that they need to deliver these projects to the home buyers and not treat the way in the past that many developers had done.
Right. Dhirendra, quick question again. I'm going to circle back because so many people are asking us this. They're asking us to help them choose between the old and the new regime. Assuming that we have to choose for 2023-24, which is the next applicable year, which one would you recommend? How do we choose?
No, one should just be guided by what is more profitable. And I would just like to, do a plug of a tool which we are putting together tonight, and you can try it on our website homepage tomorrow morning, which is you put all your income breakup, and it will be able to, and all your investment schedule, and it will be able to suggest which of the two plans of old regime or new regime, the revised new regime, which of the two will be better for you. So check it out tomorrow. But I think in most cases, if you don't have long-term committed investments, the new regime will actually work out fine very quickly.
So remember, of course, as much as the government, and this is me talking, as much as the government might be telling us that they're simplifying the new regime, you really need to you're simplifying the tax regimes. You really need to consult a tax specialist, or the app that Dhirendra is telling you, to decide what's best for you individually. And that can only be done taking a look at what your goals are for your money, what your income is, what your savings are, what you're putting away on an annual basis, and then what is most profitable for you. So, unfortunately, what this does is make tax consultants in higher demand more than anything else, and
No,
that's
because I have a slightly different view that, if the new scheme, the new regime comes into play, then I think there won't be a need for, we won't need tax consultant. In fact, government will send you an invoice and you just have to pay up.
okay. So, yeah, but if we opt for the new scheme, then we will have to take responsibility, each and every one of us, to sort of push ourselves to make the investments that the old
No,
scheme was pushing us
that
to.
is a completely independent project, Faye.
Right.
But you really don't have to worry about your tax filings. Tax filing will be over.
Okay, so if you opt for the new scheme, then basically you have to treat your taxation and your investments as two separate things. And,
Completely independently, yes.
they're completely independent, and they're not linked to each other. They're not going to drive each other. All right, gentlemen, thank you so much for joining us
Okay.
this budget day. But I do hope we can continue having conversations on a regular basis and not just meet once a year, so we
Sure.
can give our audience perhaps a clearer understanding of how investments should be, or money should be, something we talk about all year around, and specifically not to do with budget day. Thank you so
Right.
much. And
Thank you.
of
Thank you
course,
very much. Thanks, Surendra. Bye.
Thank you.
all right. If you have questions, leave it for us in the comment section. We'll try and put together another panel where we discuss the larger economic issues like inflation, what the government has allocated for farmers, for agriculture, for healthcare, for example, bigger challenges in terms of development. We'll try and put a panel of economists together for tomorrow. For now, thank you for watching. Good night.